Good evening, traders. Welcome to our session today, and we want to look at rejection candlesticks. So the guys who had joined us earlier, I see Alex Kamau. Hey, waiting for a session. Here we've started. Hey, warm up. Thank you and welcome to the session. And here we go. My name is Matthew. So let's start by looking what a rejection candle is. This is a single bar pattern that signals potential zones of price rally. The candlestick is characterized by small body on one extreme and a long lower shadow on the opposite side, or upper shadow on the opposite side, indicating price rejection at that zone. So this candle can effectively signal a trend continuation after short price retracements, and as well it might indicate potential trend reversals when they show along support, resistance levels, or even at demand and supply areas. So this is an example of rejection candlesticks. And on one side, on the left, we have the bullish reversal candlesticks. And then on the other end, we have bearish reversal candlesticks. So if I annotate it, this is where we have the bullish reversal candlesticks, which means we are expecting the price to change to the upside. And then on the right side, we have the bearish reversal candlesticks, where we're expecting the price to resume a downward move. So let's look at the application of application on the buy setups with the bullish reversal candlesticks. So the candlestick with the long shadows indicate that there was intense selling activity initially. However, buyers came in and with significant buy volumes, they were able to overturn the initial selling pressure. So when such candlesticks manifests along support or demand zones, this might indicate an imminent market rally to the upside, because it is signifying that there is a rejection of the selling and then buying is setting in. This is how it might appear. This is how it actually appears on the charts. As you can see, indicated in yellow, we have the candlesticks with long shadows or long tails on the lower side. And this is on an uptrend. So on an uptrend, you want to check for candles with very long tail on the lower side and a small body at the top, usually called pin bars. So in this case, you see they are occurring on an upward plane. Then after confirmation, there's a very strong push to the upside, showing the start of strong upward move. Those are the candles indicated there. After a confirmation candlestick like this one, from that point, there was a strong rally to the upside. The second scenario, we have that pin bar. Then after the confirmation candlestick, which is the next candlestick, which actually confirms the upward momentum right at that point, then you can see there was a strong rally to the upside. So traders would set their buy positions at that point, set their stop losses on the lower side, targeting the peak of the market. And those examples, you can see them all along on the chart. So that's the example for a bullish movement in the market and how you could use the bullish pin bars or the bullish reversal candlesticks. Let's now look at the bearish scenario. And before that, you can as well look at it on a range. So in this case, you're looking for those reversal candlestick along the support area, and this could be a demand area as well. A good example is where on the extreme right, we have a pin bar occurring, and then later there's a confirmation with that strong bullish candlestick, which is confirming momentum to the upside. And right after the close of that candlestick, that is where you have the right buying spot to the upside. Set the stop loss on the lower end, targeting the tops or the upper range. Let's look at the selling setups or bearish reversal candle setups. So the bearish reversal candlesticks will have very long tails or very long shadows. Usually it takes more than 70% or 75% of the candlestick. And then the body or the head is usually small. There are several variations of these candlesticks. You might have some that form without any body. They can be a little bit bullish or bearish in nature, but still we focus on the size of the tail. If it's more than 75 or 70% or bigger than the head, then that's really what you want to focus on. What it means is that there was intense buying initially up to the peak, but then at some point we had sellers coming in with big volumes, and that one overturned the buying activity. So when such candlesticks show along the supply zones or resistance zones, it indicates that price is at the tipping point, and there's a likelihood of a significant rally to the downside. Let us look at how they look on the charts. In this case, on a downtrend, you might use a trend line or other tools to mark the trend, like a moving average. And in this case, you realize such candles, like in this scenario here, you have a pin bar or that bearish reversal, the very long tail on the upside and a small head. After that, you have a candlestick which actually confirms the downward momentum. Right after the close of that candlestick, that is what gives the signal to enter to the downside. Then you have your stop loss on the upper side. And after some time, you see the momentum actually unfolded to the downside, or this downward move. Another example where you have a clear pin bar or reversal candlestick is where you see I've marked, we have a very long tail, the small body. The next candlestick did not actually confirm. It also formed rejection on the downside, but the third candlestick closed with a strong body. That is what gave a confirmation. And that's where traders could have entered a short position or sell with a focus on the lowest part of that trend in the long run. As I'm covering this one, I see there is a question by Dominic. These things look simple on the chart. Why is it difficult on real time? Usually on the chart or on the book or on the board, you're just being given a simple view. But when you go to the charts, you need to wait up until you have a clear confirmation. Most likely, you want to check them on higher time frames so that you get a very clear picture. Also make sure you identify a very clear trend so that you get the strong moves. Let us look at a range, or when the price is not trending to the downside. So check at the top of the range, you realize we have rejection candles. So in this case, we do not really have that candlestick with a very long tail. We're just having a rejection from that zone. But because you're focusing on the rejection candles, the one with very long tail and a small body, we look at the extreme right, where we have a candlestick, very long tail, like 75% of it is a tail, and a small body. Right after the candlestick, which gave a confirmation, that is where the downward move was confirmed. In this case, this is identified on the daily. You check on the left, you see it's on the daily. So after this rejection candle, the question might be, why is it that right after that confirmation, then the price went up? Does it mean that entering at that level would have meant someone made a loss? Remember, this is on a very high time frame. Sometimes you want to identify these rejections from a very high time frame, then you go back to a lower time frame so that you get a confirmation much earlier, means you enter your trade early. Again, these signals, they are not 100% assured since we are speculating in the market. We're trying to find the best entries in the market as the movement unfolds, so we can be on the right side of the move and make some profit before it changes. So let us move to the charts and try to identify 1 or 2, 3 examples as I answer your questions. Remember, you need to combine these rejection candles with other tools in the market for you to get good entries. So here I have a US oil chart. It's on 1 hour. I would advise traders to use that setup or the rejection candles from a very high time frame, because that one confirms a strong move once you go to a lower time frame. As I'm going to the charts, I see a question from Dominic. He's asking, what would be the time to use such candles? And now the buyers or sellers rejection are ready to take the market. My advice is look for these rejection candles from a very high time frame, then you get a confirmation for a strong run on a lower time frame. And mostly make sure it is in line with that trend, as those ones signify a good entry to ride that trend. Like in this case here, we had an uptrend where you get a rejection candle. There was a strong move to the upside. In this case here, there was a rejection, which resulted into a very strong move to the upside. Again, at the beginning, as you can see on the chart, we had another rejection candle at that point. After the confirmation, you had a strong rally to the upside. And this one is on 1 hour chart. So it means if you want to get some clear examples, it's advisable check them on a higher time frame and wait for confirmation, and then you can go for such trades on lower time frame for a clear entry. That way you're able to get strong run on that trend. Another example, we have that candlestick there and the price short to the upside. This is where you're looking for continuation, and these ones actually give a very strong run to the upside. And all these are occurring on an uptrend, bullish reversal candlesticks. James is asking, when should you buy or sell? You should actually buy or sell when these setups, when you get a confirmation of a reversal. This one means, for example, let's look at the first case here, where you have this pin bar. It shows there was initial strong selling, but buyers have set in the market. So there's a rejection of the selling pressure, and then wait for confirmation of this second candlestick, which actually shows buying momentum. Then right after that point, then look for a buy or enter a buy order, set your stop loss on the lower side, targeting the upper range of the market. Usually, if you have a small amount of money in your account, you would want to go for a lower time frame where you can set your stop losses with a lower risk. So let's go ahead and look for more examples on the New Zealand yen. That approach can be applied on any instrument, so long as you practice the technique enough to get good setups. This is on daily. Let us look at this range. On the lower side, you can see we have a strong area of demand. If we highlight that zone, let's try and look for bullish reversal candlestick on that zone. On that part which I have highlighted, and I'll zoom in. Initially, there was a strong movement to the downside, and then there's a pin bar. So sellers were strong initially, but then buyers came in, pushing the price to the upside. This is one of the variants of rejection candlesticks we might be looking for. It's not all the times that the rejection candle is 70 or bigger, is 70% or bigger than the body. It might be a 50%. What helps to confirm that it's a bullish move is the second candlestick, which is the confirmation. And you can see it turned to be a bullish candlestick that almost closed to the upside, as you can see. Right after that, your entry could have been at the close of the second candlestick all the way to the upside. But again, this is on a daily chart. What traders usually do to ensure you have a smaller risk to the reward, you go and focus on a lower time frame. Once you find the rejection, you want to wait up until the price closes above that candle, the rejection candle, and look for entries to the upside. And you can see it was not disappointing. We had that move. We move down to, let's say, for example, 1 hour at that section. Just a second, let me look for that section on 1 hour. So we see what we could have gotten there. It was around 24th March, 2023. This is the area that you're looking for that rejection candle. So usually we're talking about price breaking and settling above that level. And you can see how the price broke through that level, pulled back again at that point. Let me zoom to that area so you can see. Price broke to the upside, pulled back to retest, and then confirmed actually with another pin bar candlestick and confirmation. Right at that point, traders could have gotten stop loss of around 30 pips. Might be big to some of us, but still quite reasonable as compared to this big area of around 100 or so pips. And then after that, look at the ride. From this point all the way to the upside, that run for profits could have been around 120 pips with a stop loss of 30 pips. That is 1:4 risk reward. Quite interesting. And for someone who was keen to ride that trend, went again up all the way to 130, and then actually continued before we had another rejection here and the price retraced to the downside. So right there, it's a technique where you get your signal rejection on a lower time frame, on a higher time frame, sorry. Then you jump onto the higher time frame for an entry. Keep the questions coming. I'll make sure I answer all the questions by the end of this session. Let's keep looking for more examples. And let's go to gold. Really very interesting. It's one of the most interesting instruments to trade. Look at key areas on gold. And this is a weekly chart. Right at the top, realize where those reversals happened. You had very strong and big bearish reversal candlesticks. Right after that, the price shot to the downside. For the traders who want to run the trend for long, observe the change of that trend from a very high time frame, and that one is signified by those rejection candles, very long wicks. For example, this one here. See that? Right after that, this one is already into a strong bearish move since April 2022 all the way to October 2022. So for the traders who want to invest in the markets or want to trade as investors, this is an approach that you can take in the market. Look at those reversal candlestick from a very high time frame, and of course it will take much longer to get those confirmations as those types of candlesticks before they materialize. Look at that one again, right? When I look at the comment section, I see Alex is talking about chalk. Chalk is change of character. We can speak about that one much when we're looking at smart money concepts. For today, we want to look at these candlesticks. In the scenario of smart money concepts, these candlesticks that you're calling reversal candlesticks, they can signal sweep of liquidity, right? And they form points of interest. So when the price returns there again, like in this case, the second case here, when the price returns to that level, gets a very strong push to the downside. I don't know whether that is the case in our current price movement. Price is moving back again to that rejection candle. If it's a point of interest, again, I don't know, but it might push the downside. Hey, Kevin. Kevin is saying, according to what I know, and I always keep seeing in the chat I open, I always find a pullback. So we found to be difficult for more traders to place trades. So I explained about pullbacks, right? So what is a pullback? A pullback is also a retracement. That is where the price tends to take a little bit of a pause before resuming to the major trend. Let me try to explain with, for example, let's look at the this strong downward move. That is a trend, downtrend in that case, which originated from this strong bearish candlestick. You realize that price pushes strongly to the downside with momentum. Then at some point here, it seems to retrace or take a short pause. And then later, it resumes a very strong momentum to the downside before taking a little bit of a pause. Now, these parts which I am going to circle are what pullbacks are in the market. I'll clear the drawings so I can circle them. So this move here, for example, is a pullback. This move here is a pullback because it tends to move against the general flow of the market, which is downward. But then a pullback changes once there is a break of the structure, like in this case here, or the change of the trend. Then the pullback changed, and now we have a new trend to the upside. This is what now seems like a pullback in the case of this upward trend. And if this level at the top here is not a change of trend, then we could consider this one as a pullback as well. We'd want to see if this one resumes to the downside, then with the break of this level, we'll be talking about a downward trend. But that's a story that we can speak more on another day. I hope I've answered you, Kevin. Thank you so much, traders, for keeping it FX Pesa and taking your time to attend these sessions. We're here to help you understand the markets much better, and so you'll be profitable in your trading, and we maintain the close relationship. I've seen questions about spreads. That's what I wanted to handle at the end. So we have two types of account. We have executive account and we have premier account. For the executive account, we have the normal spreads in the market. Like, for example, my account here that I'm using to give examples is an executive account. I'll zoom a little bit so you can see. When you look at the spread of Euro USD, for example, it's showing 22 points. But if you look at it in terms of pips, divide by 10, that's going to be 2.1. And look at pound USD, it is 31 points, but the right way of reading it is 3.2 or 3.1. That is for executive account. For the Premier account, the symbols are annotated with a .p. Like for example, it will be Euro USD .p. In that case, you will have a super low spread specifically for Euro USD. It's around 0 or 0.1. So you have a choice to make. You can either trade with a Premier account or an executive account, depending with your preference on the spread. If you want low spread, you go for the executive account, but there's a small commission charged. So for the executive account, you've got the normal spreads. They are usually not very high, but then there's no commission charged. For the Premier, a small commission and a very small spread. Keep the questions coming as I look at one last example of the rejection candles on pound USD. Remember, you can use support resistance levels. You can use demand zones, right? You can use trend lines. You can use a moving average to identify those reversal candlesticks. In this case, we have a moving average, EMA 200 on 4 hours on pound USD. Let's see whether we can find a reversal candle pattern that is in line with the trend. It's advisable that you always trade in line with the trend, because that is what favors the movement. So long as you're in an uptrend, we're looking for a rejection candle. It might not be a pin bar as such, but whenever you see a rejection candle right at the support level of the moving average, like in this case here, then you want to focus on how the price behaves on lower time frame, and you're able to find an entry. In this case here, you have a rejection. Is a 50% rejection of the whole candle body. So in this case, once you find rejection as the price is touching the moving average, that's an indication that this might be a valid support level for the price to resume this strong trend to the upside. And you can see how it went by. If you go to a lower time frame, usually let's say 2 time frames lower, that was on 29th June. Let's see what happened. Keep the questions coming as I'm looking at this. So look at 29th June on 15 minutes at the point which I've marked. Let's see what actually happened. Or how I could have confirmed that entry, 29th June. Here we are. All this part is what we can see from that candle. If you look at this area, you look at other, of course, you're going to apply other concepts, in trading. And you can see we had a range. And once the price settled above that range, there was a retest, an upward move. This one could have been the point of entry at this area here. And right after that, price never returned lower than that level. A little bit of a sweep here, but the price kept on going higher and higher and higher. That is all from this small session here, where you had the rejection. So since there are no more questions, I think I'll call it a session. And thank you all for taking your time to attend this evening training. This is meant for you all that are not able to attend our physical classes in our academies, but we still welcome you to visit us in our academies so we can speak one-on-one, look at those examples with you on your trading device, if it's your phone or on your laptop, and you're able to perfect it more. Again, thank you so much, and we invite you to follow us on our social media channels. That's on Facebook, Twitter. We have updated our Twitter channel to FX Pesa Official. So you can go and search for FX Pesa Official, not FX Pesa Kenya anymore. Right? Join us on LinkedIn, Telegram, and our YouTube channel, where we post all our educational materials. So thank you so much. Have a great evening. See you all next time. So bye for now.